Right, hello and welcome back to another video. Another month of trading and investing is behind us, and it's been a pretty eventful month, hasn't it? Quite a lot of volatility going on in both the UK and the US. Yeah, so this video is a little bit delayed. We're the 7th of August now, so it's been another week with continued volatility and all kinds of things going on. But this will just cover all of the trades and things I made in the month of July. So without further ado, let's get on to the usual stats and things. So I forgot to do this beforehand. So for the month, it ended in a bit of a disaster. As those that will know if you've watched any of my updates before, not so much now, but during this month I was very heavily invested in kind of the mega cap tech US stocks. The start of the month was going great. We were up 3% in the first 2 weeks. I was starting to think it might have been one of those months where I finish on like a 5, 6, 7, 8% up month. And then no, we gave it all back in the space of kind of 3 or 4 days, clawed it back again. And then there was the big tech sell-off that I'm sure everyone knows about, which really targeted kind of the US mega cap stocks, of which I hold quite a few, or did do. So yeah, and then we started clawing it back. So to be fair, with all the volatility that's happened, with the huge US tech sell-off, considering more than half my portfolio was in those kind of stocks, to come out of the month basically break even, minus 0.08%. It's a rounding error. It's break even basically. I'm not too disheartened by. I was a little bit more disheartened in this period here when it was all coming undone. But on the whole, it's not too bad. I did make quite a few mistakes. Not all of those were in the last week. Some of them were pre-existing mistakes that kind of revealed themselves during this period. But I'll get onto that. There's definitely some things that I need to improve on that would improve these returns. But I'm learning. This is a process, so I'm trying not to be too hard on myself. I actually talked about it in one of my recent trading journal posts that I post up on Twitter, on X, where I just run through some of the mistakes, but I'll go through it again here as well. So the FTSE, because this was a mainly US focused sell-off, almost entirely at this stage. Now we're in August, there was some UK, but at this stage it was pretty much entirely the US kind of big cap tech stocks. So the FTSE didn't really get affected. So the FTSE's run away and destroyed us in the month of July. So up 3%, and I'm level. For the year to date, it's a bit demoralising, but we are now behind the FTSE All Share, where we were running away from it. Up 8.26% for the year. The FTSE's only just ahead of us. The FTSE All Share, that is 8.42%. Which is what I use as my benchmark. So this is a bit annoying that we've given that back and we're behind again. But I know that there's pullbacks. You're never going to have a smooth upwards line. You can see we had a pullback here where we were up kind of 6% and gave it all back to zero, and then we rocketed up to kind of 12%. I'm fully expecting this to be another kind of pullback, and then we rocket on up. And yeah, I'm still very confident in finishing the year with what I would, for myself, consider to be a kind of decent return. And so that it's out there now, I would consider my target is to get 15% plus returns a year. And obviously I'm not going to achieve that every year, and some years hopefully I will achieve more than that, but that's my target average. That's what I'm trying to work towards. So any year that I get above 15%, I'll be very happy. And it's still possible this year. So that's the year to date. You can see here we've come back more into cash, what I'll get onto in a minute. And all these screenshots were taken on the last day of the month once the market's closed. So they're all taken at the end of July, not present day as in August. And then what is this? This is the all-time returns since the start of the portfolio in the start of 2022. And we're up just shy of 21%. So in the long term, we are still crushing the FTSE All Share, which is at almost 8%. So not quite, but almost 3xing the FTSE All Share. And this is just a quick overview of the portfolio. I won't spend too long on this, but for those that want to pause the video and just have a look through, you can. I've ordered it in my current gains or losses in each of the stocks. And it's fairly reduced from last month. I have a maximum of 20 positions in my portfolio, and I've sold quite a few in the past month, which I'll get onto, so the portfolio is slightly reduced, which is fine. That's what I will be doing in periods of kind of volatility and downturns. So let's get on to the trades, shall we? So there's going to be a theme in this video, unfortunately. It's not a good theme, and not for me anyway, of me having stops in place and ending up selling a little bit below, if not a long way below the stops. So I always have stops in place, and the idea is that, the line that I put in is never more than 10% below my purchase price, and oftentimes if there's a sensible level, it will be less than that, so 7-8%. Unfortunately, with the volatility we've had and the kind of tech sell-off, quite a lot of the stocks I was holding, it kind of completely dropped through my stops, as in this first example that I'm going to show now. So I bought into MedPace Holdings when it broke out. So this is all in this month. It's all in the space of a few days. When it broke out, you can see it was in this sideways trading range here. Quite a nice tight trading range, looking like a really, really good setup. It broke out here, but I was watching it. There wasn't a huge amount of volume. It didn't convince me, so I didn't enter on that day. Waited. It came through, came back down, came back up again here. And there was a little bit more volume, especially early in the day. It just got to my 1.5x. So I entered. Unfortunately, when I entered, it was near the top for the day, and it pulled back slightly, but that's fine. The entry setup was all good. There was volume. It was breaking out of a defined trading channel. Oh, I need to put on the... hold on a second. So I found this, which is the RSI that's built off Investors Business Daily RS rating that they use, which is in lots of books and things. So I found someone that's made one of these for TradingView, and I've put it on, and this is now what I'm using. So the higher the better. It's out of 100. The higher the rating, the better. If it's above 50, its average, its relative strength is better than the average of that of the market. And this is against the S&P 500. And if it's lower than 50, then it's worse than the market. So 84 rating is pretty good. And we want to see high numbers, really. Well, definitely not really. We definitely want to see high numbers for this RS rating. So everything was looking good. It's just one of those things. It pulled up the breakout. It came back to test. And then it had on earnings. The earnings were not good. It missed on a few things. It didn't actually miss on results, but its guidance was their guidance was not good at all. And it gapped down 18% in one day, straight through my stop. I didn't sell on the day because I was thinking maybe it would bounce, because I thought the sell was overdone. It didn't. I just made the decision to sell immediately at open the next day in case it carried on down further. So I got out here. It did actually pull back a bit the next day, but not too far. So I was unavoidable, really. So I bought here, sold here, and it was, unfortunately, it was a 19% loss, even though my stop was at 8.4%. So that's fairly frustrating. Nothing I could do about that one, though, I don't think. I think everything on that, I don't think I've made any mistakes on that, really. The next one, you can already see before it's loaded, this huge downline here. So this is Appfolio, a similar situation again, in this kind of trading channel. It broke through, again, big volume. You can see the volume down the bottom here, and you can see the numbers up in this corner here. So it had 528,000 of volume. Its average was 270. So plenty of volume on there. Bought for my setup, for my rules, the entry was fine. I can't really see any issues with the entry. It just, again, after earnings, got clobbered, and it was down 11% in one day. Went down through my stop. I was waiting to see if it came back up to see if I needed to sell, and I just sold the next day. So, again, I don't think I did too much wrong here. What I could have done is when the earnings came out and I could see that the market was selling off, I could have sold before it got to my stop. But I don't think the earnings were actually that bad. And let me pull it up, actually. Okay, so here's my earnings snapshot for Appfolio. And in terms of results, I don't think it was that bad at all. They beat on guidance. Their forward projections are for 36% year-over-year EPS growth and 20% year-over-year revenue growth. And they had decent numbers for this current quarter. It scores well on the checklist. And most of the points that they're talking about were good. But after it dropped, I kind of did a bit more research, and the main thing that caused it to drop was that it's not actually highlighting. Oh, there we go. Total units under management only grew 9% year over year this year, whereas for the previous quarters, it's been 11, 12, 13%, and the market was expecting that 9% year over year to be higher. So I think that's what caused the sell-off as far as I can tell. And sorry, I should say that units under management, they are a software company that provides software for property management. So units under management is the number of units, like buildings, rental properties that are under management, and that's kind of how they're growing their revenue. So it's a very important figure. But that's, as far as I can tell, what caused it to fall, and it's been continuing to fall since. So maybe I could have got out sooner, but I'm not going to beat myself up on that one. So another loss of 12.7% loss on that one. So again, not kind of a huge mistake, but probably could have got out sooner. Next, these aren't really in any particular order, by the way, either. So this is a UK stock now. And this one, there's a couple that I bought into that in the month of July that I was wanting more exposure to the UK because the US was selling off, and I actually most of these entries actually, they didn't pass my checklist in terms of they didn't have a score of 36 or higher. Some of them were 34, and I allowed it because I wanted more exposure to the UK, and they were setting up well. So this is present day, so this is the 7th now, and it's dicing around with this stop I've got going on here. But the setup, it had been in... So this was the previous high back here. It kind of been setting up, broke through this base. I wasn't following the stock at the time, or maybe I was, but I wasn't. I wasn't buying stocks that didn't pass the checklist. It broke up and then broke through to kind of a phase 2 continuation. So I entered here. It's not the best setup. Again, I was looking for some UK stocks to enter, but I think it had earnings or trading update or something which boosted it. And you can see down here the volume was really good compared to the average. And I bought the day after. And there's nothing really too wrong with it. I mean, it might still be a successful trade, but it is dicing around with the stop. So it could just be a failed breakout. But my stop is only 6% away, so it would be a small loss if I did, and I'm pretty sure... Yes, because it didn't pass my checklist, I only entered with a half position, so I was minimising risk anyway. I just was looking to build a few more UK positions into the portfolio. A similar story, though this one was a full position, is Acquia Exchange. So they are like similar to AIM and things, that they've had their own stock trading exchange and they do some other things beside that as well, but that's mainly what they are. So this one actually does pass my checklist, hence the full position. It had been in a downtrend, as you can see. Let me turn off the RS because that's very confusing. It'd been in a steady downtrend after a very steep downtrend. It broke out down here on good earnings, and had been taking a breather since April, so a good kind of few months of sideways action. And I had these trend lines in. I'd been watching it for a month or so. I'd mentioned it in some of my my trading diaries and things as one that I was watching, and yeah, it broke out. It didn't have volume on the first day, as you can see down here, so I was hesitant to jump in. Volume came the next day for some reason. I'm not sure why it didn't come on the first day, but I decided to enter on the second day. Maybe that was a sign that I just shouldn't have entered at all, because it ended up not being 1.5x. It just hit the average. So maybe right from the beginning, this was because it didn't have volume on the first day, this was a sign that it was going to be a failed breakout. And it's literally hovering around my stop at the moment. So I don't have automatic stops, and that's something I might change going forward. But it's hovering around there at the moment. If this today, so we're live at the moment, it's 4:00. If this closes the day down here, I will probably sell out in the morning. Well, I will sell out in the morning. But you can see by both days, there's the kind of long wick of the candle, which means there's buyer pressure coming in to push the stock higher. So I wouldn't be surprised if it moved up, and that's kind of what I'm waiting for. So that one's still going. Lamb Research. So this is another US one that got hit in the sell-off. So I've deleted my line now. Let's put that back in. Oh, make it blue. So this was what I was looking at. It broke through here. Again, I waited a couple of days. It tightens up here, and I bought in once it passed the high of this little tight range. And initially, it was working out to be a good trade. My stop was down here. Let me make that a bit thicker. My stop's down here, and this is another one of those where I was a little bit undisciplined. Whereas here you can see, well, so let's run through it as if it was day by day. You can't see the live action, but so this day it bounced off my stop. So clearly some other people probably had a similar stop. With a low wick, meaning there's buying pressure coming in. The next day I was watching it, it came down, it closed below my stop. So I was like, okay, the next day I'll sell if it doesn't come back over. And then the next day it shot back up. And then the next 2 days later it came down again, and it was in the same situation where, okay, I'm going to sell the next day if it doesn't come back up, and it didn't come back up, so I sold here. So that's my thought process going through it. But it is a good couple of percent below my stop. So my stop should have been it's bang on 10%, and I ended up having a 15.8% loss, and that, you can see on the screen it says it should have been 13.29%, but with AJ Bell they have quite high FX costs, and this was a full position, so I end up having about £40 each way in FX costs, which added a bit, and the pound has been strengthening, so I lose 1% or 2% during this period just from the pound strengthening against the dollar. So I think what I may need to do going forwards is, if I want to have a maximum of 10% stop, for US stocks I need to be putting my stop around kind of 7%, 6 or 7%, and just really finding those tight, really strong entries. So this, in terms of the entry, I don't think there was anything wrong with it. I think if this had been 6 months ago, I think this would have carried on. Obviously, this month has been a bit of a blowout for US stocks, and everything's kind of just fallen off no matter how good the fundamentals of the business were. So it's not the strongest setup in terms of it didn't even come down to the 150. But I guess that means it's got strength. But yeah, I think I just need to be a bit more disciplined with my stops and make them a bit tighter. Deckers. So this is one that I've been waiting to enter for a long time because I really like the company. I really like the products. I own several pairs of Hoka shoes because I'm an avid trail runner. I run ultra marathons and things. I just completed my first 100-kilometer ultra run actually last month in a pair of Hokas, in a pair of Hoka Speed Goats. So I'm a very big fan of the product, and in terms of the fundamentals of the business, it's very, very good as well. And you can see this huge uptrend it's been in as the Hoka brand has been taking off, and they've been doing really well with the UGG brands as well, and it's just been running and running and running. And typically, I was waiting for a reasonable entry point. As soon as I enter it, it falls off, but that's just the way it goes sometimes, isn't it? I was entering after a massive run up, so there's always going to be that risk. But entry-wise, it was after earnings, which were really strong. It gapped up. I entered on that day with big volume. As far as I see it, there was nothing really wrong with the entry. All I could say is that, again, it's not the strongest setup. It hasn't even pulled back to the 150. It hasn't been going sideways for very long. It's just one I was keen to get into. And again, if this had 6 months ago, it probably would have carried on up. Anyway, ever since then, so my stop was down here, 10%, it's been selling off. So this is one where I would actually consider a mistake. So we were up, not much, but kind of 8-9% at this stage. My stop's all the way down here. I think at this stage, once we've kind of moved up, I should have moved my stop at least to above the breakout point. I don't think once it's proved successful up here, I should have my stop all the way down below the breakout point, because once it's fallen below that, it's very likely it's going to fall further. So that's the first mistake I think I made. Once it started falling here, even without my stop there, I was thinking, oh, maybe it'll bounce off here, but it didn't. Once it broke through here, I should have sold, even though it wasn't at my stop. And that gave it the chance to, this day was a really big fall and dropped all the way down. I panicked and sold down here when it ended up closing a bit higher. But I wanted to just get out of the stock, and at least I have the discipline to sell when I'm supposed to, with my stop being there, even if it was a long way down. So that's, again, it should have been no more than a 10% loss, but we have lost a 15.7%. So this is what something I need to fix from this month. Yes, there's been a tech sell-off, but there's going to be sell-offs. They're going to happen quite frequently, and I need a strategy where I can cope with it better than this. I should not be having losses of more than 10%, and if I have, which I have, I need to change something. So yeah, tighter stops. I need to just, I think for the US stocks, wait for the absolute best setups, and be more strict with raising my stops once a stock starts moving. So like I said, in this case, move my stop up above the breakout point once it started moving, and maybe even move it to break even. I mean, why not? Next up, there's a theme. There's a theme. Sorry, this isn't the... Oh no, this is a good one. There we go. This is actually a good one. I thought it was a different one. So this is Lantheus Holdings, a US healthcare company, and they produce... I won't... Well, I can't really go into the technicalities of it because I don't understand the technicals too well myself. But they produce like the dyes, the chemicals and things that are injected into you before you have a scan for certain things. So they produce ones looking for prostate cancer and that type of thing. I bought in here when it broke above this line, and I have to say this was luck. This shoot up here was luck. But it was just tootling along. I was just waiting for it to move one way or the other. And then on this day, so Medicare, they announced that they were going to be basically changing the rules that would allow Lantheus to make more money off their products effectively. And it shot up from where it was in 2 days, 58%. So obviously I was very happy. It was going very well in these 2 days. It started slowly coming back, and there were earnings coming up. And I decided, I mean, I should have, in hindsight, done it here, be more decisive and do it quickly. But I took a week or two thinking about it, and then I decided I didn't want to hold into earnings because it was too risky. There's the whole thing of, what's the saying? Buy the news, sell the event, or whatever it is. So I thought if they come through on earnings and say something that this isn't actually that big a deal for them, it's not going to make as much of an impact as everyone's thinking, then the stock could absolutely tank. So I decided to take profits. I just sold out of everything there. Yes, in hindsight, I could have done it back here and made an extra 10%, but it was the correct decision, whether I did it late or not. So with Lantheus, and we made a 37% profit there, and that was a full-size position. So that pretty much made up for all the mistakes that I've been making in terms of letting my stops run further. And then to kind of vindicate myself slightly, it did, on earnings, actually, it started the day down here. So it dropped hugely. It did pull back, but ever since it's been kind of trickling further. So it's the right call. So I'm going to give myself a pat on the back for that one. Again, this was luck. There was no way I could have seen that coming at all. I was just basing it on, it was a stock that was on my watch list, and I was just waiting for it to break above this previous level here. So that's all I did. And then this was just luck. But you've got to take your luck when you get it, haven't you? Because there's certainly some bad luck as well. Arista Networks. So this is another sell-off casualty, though it wasn't too bad. But this one and Google, the next ones, are ones where I have decided to implement a change in strategy. So I bought in here on the break, took a dip down, didn't hit my stop, and started running up. I did raise my stop to above break even, and it came down and it hit the stop, and I sold out. Due to FX and the movement of the dollar and the pound, I did actually still take a 4% loss, even though technically I sold on the chart above my entry price. That's just one of those slightly frustrating things with the US stocks. But what I definitely see, and it's more apparent in Google, but is not allow one of my trades to give back this much of my profits. So I was up at the peak 20% basically, and I've given back to the point where I sold, well, all of it, because I'm now -4, but on the chart 16%. So, and this was for a trade. So you can see this green line was my target price. It was in an uptrend. So it wasn't one I was planning on holding for a long time. I was just in for a quick cash grab basically and then out. So in those kind of situations where I'm doing it for a short-term trade rather than a longer-term hold, I need to be a lot tighter on not letting stocks come back. So what I'm going to be doing now is putting trend lines in rather than the 50-day. Definitely not the 150, but even the 50-day, I would have given back most profits. So I'm going to be using trend lines more, just to lock in more profits for these shorter term ones. So if it would have broken here and I would have sold out here, which would have given me a 15% on the chart, take a few percent off because of FX and all that, and it probably would have been about 12%, but still a much better profit. And you can see here on Google, I bought this back when it broke out of this range. Again, an entry I'm very happy with. This was one of my previous sells, so I bought back here, ran it up, sold here. It hit my stop, which was on the 150. I re-entered here, nice run up. And you can see I've put this trend line in since I've stopped out of this and Arista Networks and a few others. I've gone back and looked to see what I could do differently. And this is a much clearer trend line where you can see, even the 50 would have been a lot better using the 50. But this is where my stop was. And I sold before it hit my stop. So that's good. That's because it has continued down. And this was when all the tech was selling off. So at least I sold before my stop, and I did lock in. I think it was only 4% profit. Again, on the chart, it should have been 8%, but it's FX and fees by AJ Bell and stuff. It just, when the dollar's moving the other way, so when the dollar's strengthening against the pound, it's going to go the other way. But it's just one of those. It will ebb and flow, and in the end, it will even itself out. But because in 2022 and 21 and things, when the dollar was strengthening, I had positions that had only moved 10% on the chart, but I was up 14%. So it goes both ways. It's just one of those things. But yeah, I think in future for these shorter term trades, I'm going to use the trend line. So I would be out here, which would be a huge difference, and I'd be up 17% as opposed to the 8 on the chart. And even if I use the 150, the 50-day moving average, which is this pink line, I would be out sooner than I was. I use the 150-day, which is the thicker pinky purple one here, for my longer term trades. And I have the 50 on there to give me clues and insights on the shorter term trades. But I think I'm going to use a combination of the 50 and trend lines from now on the shorter term trades. So yeah, we were out of that, as I say, 4% positive, basically break even. And then Crocs, feels like ages ago now, but this was technically in the month of July. This one wasn't too bad. So let's just zoom out a little bit on Crocs. I wasn't following it all of this period. I started following it in this area. I think I was following it when this down run was in. It's a company I quite like. They make the Crocs shoes, and there's got a few other brands as well, but Crocs is the main one. Good entry. I was happy with this. You can see down here this huge volume spike, breaking out of this kind of resistance area above the 150, putting in the new uptrends. The entry for that, I think, was done pretty well. I'm happy with that. And I was targeting, it was kind of like a halfway between a short-term and a long-term trade. I was targeting up here, which would have been a 50+% move, just because this was the all-time high, and I figured it probably would have a pullback once it reached there. We didn't get there in the end, but so I think I was using the 150 to start with for my stops. But then when it broke through this level, it kind of pulled back, broke through this level again. I moved my stop up below this level here, just to make sure I was locking in some gains. And then it fell down, broke through there, and I sold here. So I locked in a 19% gain on that one. So yeah, I don't think there was too much wrong in this one. I managed to get out with some decent profits. I don't really see how I would have got out much sooner. The only way would have been guessing the top, I think. Just kind of randomly selling here, thinking that was the top. I don't know how I would have got out. Maybe as soon as it broke through there, but I was quite close to that. So happy with that one. It's continued to fall since. It's come all the way down to this where I entered and is putting a bit of a bounce back in. But yeah, not too displeased with that one. So yeah, overall, let's pull this back up. A flat month. Disappointing, considering I was up 3% at one point, and I did really feel like I was kind of like flying. I thought everything was going well, and then that's the thing with investing, isn't it? As soon as you get some confidence and think you're kind of doing reasonably well, it will knock you back. It will put you back in your place and humble you. August so far has been not much better, though I have kind of rebalanced my portfolio, and I do feel quite good now. And it's I think the rest of August could be quite good as long as that the pullback we had was a temporary one and not the start of a bear market. But yeah, it's all about learning, isn't it? It's all about learning from your mistakes, improving, taking lessons from the things that go wrong, and improving your strategies, and taking one step backwards and two steps forwards. So I feel like I'm going to be hopefully better on those shorter term trades going forwards, a little bit more selective on my entries, especially for US stocks, because of the FX difference and the fees and things from AJ Bell. So I need to make sure that they are the strongest setups. But overall, right now, even though it wasn't a great month, I feel quite good in terms of where I'm at with the strategy and everything going forward. I've rambled a lot. I'm going to have to edit this. So as always, do let me know how you've all got on in the month of July. I hope it hasn't been too bad for you, and I hope August isn't going too bad for people at the moment. I know there's going to be quite a few people that have had some losses over the last couple of weeks. I think unless you were fully in cash, it was kind of unavoidable. But yeah, let me know how you've been going in the comments, as always. I do love to see it. And I will catch up with you next month. Cheers.